tech's dominance is certainly in focus. Investors have been pouring money into everything from memory chip makers to social media giants, and it shows. The S&P's tech composite is up more than 340% over the last 10 years, compared to a paltry 191% for the broader S&P 500. For more on what tech still has to do and whether it has room to run in the new decade, I'm joined by Daniel Ives. He's the managing director of equity research at Wedbush Securities. So, Dan, a lot's happened over the past few years in technology. First of all, we've split a lot of companies off into their own sector. But tech, generally speaking, has been a driving force behind the U.S. economy, behind the markets for sure. So does tech have room to run in 2020 and beyond?
Yeah, look, in our opinion, it's a golden age for technology. And when you look at some of the dynamics going on in terms of cloud computing, for instance, enterprises, only 30% have moved to the cloud. We think that's 55% in the next 2 years. It's not just Amazon, Microsoft, it's a whole ecosystem that's going to benefit from that. Look at 5G and what I believe is going to be a super cycle for Apple and others and chip makers. In our opinion, we're only halfway through this cycle, so I still think a lot more room to run for tech, which is why we're very bullish going to 2020.
All right, so let's talk about the driving forces over the last decade. We know what they've been. It's been the mega cap tech names that were tech and maybe are now communication services. But let's throw those names in there because we've talked about Amazon. It's retail, but still kind of a tech name focus. Microsoft, Apple, Facebook, Alphabet, the parent company of Google. Many of those names were the driving force behind technology. Some of those are now communication services, yes. But can we expect those mega cap tech names to keep doing what they're doing? And are they the driving force, or can we expect new leadership from other parts of the market, like in fintech or like in enterprise software elsewhere?
Look, in our opinion, in terms of FANG, I still think we're halfway through the cycle. And ultimately what's really happened is they become more utility-like in terms of how consumers use them. They interact more with an Amazon, a Facebook, Google than their average bank. And I think what you're seeing is actually the FANG names getting further into healthcare, banking, automotive. And I think that's something going forward where I still think they're going to be leaders. I do think on semis and some other areas, you will start to see, some more leadership there. You obviously have Square and financial services. But I think ultimately, we don't see any reason why the FANG is not going to continue to sort of be the pilot on the plane on this tech rally going forward in terms of everything we see with Apple front and center.
It can't all be positive. There are always bumps in the road, always hurdles along the way, and tech is facing a lot of them, especially big tech. What exactly could derail that tech thesis in the next decade?
No doubt. I think the first thing is definitely antitrust. If you look right now, if you're Zuckerberg, Bezos and others, they're going to be spending a lot of time in the 202 area code over the next year or two. And I think the antitrust sort of spotlight, that's something, can these be broken up? We ultimately do believe it's more fines, but I think that's a broader headline risk for these companies. And then you sort of go down. You have valuations which have stretched. They need to continue to show that growth. Look what's happened in Netflix. Now you're starting to see maybe a glass half empty view because of valuation, them spending on content. And I think when you look at cloud and 5G, massive opportunities, a lot of competition going after it. You'll have winners, but you're going to have a lot of losers too. So I think as an investor, it's trying to pick the spots, not just large cap, but mid cap to figure out maybe some of those diamonds in the rough.